is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, to dear friends, and wasn't expecting much out of today. I thought we'd go a little higher, probably fill back in what we had yesterday. Numbers came out at 10 o'clock, and they were surprising. And that's pretty much all it took to get a lot of people that were on the wrong side of the market to start a nice little short squeeze. And we're off to the races. Up 40 points on the S&P cash. Almost 3 billion shares on the New York Consolidated Tape as we start the show. We've got a friend of the show, or at least a friend of, I'll call him a friend, but I email him, let me put it that way. Can you have a friend if you've never met them face to face? I think I'm friends with Andy. I've never met him face to face. Anyway, I've got another friend who got a big award today. We'll be talking about that. And he stuck it to the man at the same time. So we'll have a little bit more of that. And what else is going on? Just a huge rally, catching a lot of bears on the wrong side of the fence. As I said last week, I was glad for the move because it told me that we were going much higher and able to flip around and take the long side of the market, albeit I'm probably fishing in different waters than most people out there. Like we said, almost about 3 billion shares out there, so volume will be fairly decent. We were looking probably about mid-January to find a low and then get back up to 1975. We're in 1972. So that kind of tells you a lot. We're going to run into a huge amount of resistance at this level. Does that mean we're over? We got a couple more days of fund buying. And as we say here, suckers never get an even break. They will always run the market up as high as they can. Doesn't mean that they will run it up to infinity, but whatever they can. And that's part of what's going on today also. Does this mean that today is the high? And or in the next, or at least in this area is in the high, we're going to be shorting this market. Boy, I don't have a lot of stocks that are telling me to go short. I've got a few. So this may be a market where you could be long and short. But to me, it looked like a lot more of a trading range that maybe is about 1935 up to this 1975 level. But fairly decent of volume as we get started. Of course, we always meet here between 2 and 3 p.m.
The following takes place between 2 p.m. and 3 p.m.
And I appreciate each and every one that listens. As we like to start the show off each day with a little history, let's get that started.
And it's all just a little bit of history repeating.
It is history repeating, and on this day in 1971, James Taylor was on the cover of Time magazine. In 1872, Yellowstone Park was established so we could have Jellystone National Park for a pretty incredible bear. And Mickey Mantle in 1969 retired. But, of course, the big news on this day was 1932. The crime of the century happened. The entire nation was on tenterhooks as Charles Lindbergh's III, 20-month-old son from the aviation hero, is kidnapped from the family's new mansion in Hopewell, New Jersey. Lindbergh, who became an international celebrity when he flew the first solo flight across the Atlantic Ocean in 1927, and his wife Anne discovered a ransom note demanding $50,000 in their son's empty room. Besides, well, this thing caused so many things that it's rather interesting. First of all, the FBI got jurisdiction. Kidnapping then became a federal crime. allowing the FBI to chase people anywhere that they needed to go. One of the reasons why kidnapping is a horrible thing that happens all the time in Mexico is they've never made it a federal crime. It's only local, and you just run into the next county, and for the most part, it's no big deal. So, in fact, most of Latin America and South America, kidnapping still a huge booming business. But I think because he was such a star of the time that the FBI, I think within a year, had gotten the jurisdiction from the feds or from the Congress to actually make kidnapping a federal offense. Other things that fell out of this, of course, was really the beginning of forensics. And of course, it spawned so many CSI TV shows. I almost feel like I got to pull off my sunglasses. Like, that show's not on anymore, is it? I think it was on for a while. It was actually pretty good at one point. Got kind of a caricature of itself after a while. Anyway, one of the most interesting things is, of course, they started using fingerprints in about 1905 or 1910. Actually, the first case where they solved it with fingerprints was rather interesting. But not much in the way of forensics actually moved it forward until this actually happened. Of course, they ended up putting one of the kidnappers in Old Sparky. The other one pretty much got away because the other guy wouldn't rat on him. But he died 4 or 5 years later, but was on a cruise ship like 2 days later or a day later after they got the cash. So they're pretty sure who it was. A guy went back to Germany, and maybe he had an axe to grind against Limburg. But that's when one of the other reasons why the feds got involved in doing that. But it was a very interesting case, and probably until OJ, the trial of the century. And of course, they found out, basically matched a homemade ladder he made out of the rafters in his roof. And they matched up the grain pattern to it so that they knew the ladder actually came from pieces he had cut out of the roof of his house. But I think he knew he was getting fried no matter what, and decided that he didn't need to rat out his buddy. But his buddy took all the cash and absconded out of town. Anyway, on this day in 1932, James Taylor, Yellowstone Park, Jellystone Park, and Mickey Mantle retires. I always thought, wouldn't it be so ironic if Mickey Mantle died of Lou Gehrig's disease? He didn't, but I always thought that would have been ironic. As we said earlier in the day, we want to give a big round of applause to Eric Hunsater. I've had him on the show 2 or 3 times. Of course, this goes back to the flash crash of 2010. Pretty much right after that, I think within a month or so, he'd put out a document on what had actually happened. And everybody ignored him for a number of years. He's getting his day in the sun. We'll talk more about this when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And anyway, we're going to talk about that. Andy Hecht sending me old jokes from the vaudeville days. My friend's dad was big into it, and it's nice to see these old jokes dusted off and brought back yet again. We were talking about Eric Hunsader, a guy that I've emailed back and forth with over the last few years. And, basically he was the first guy to actually figure out what had happened on the flash crash. It was amazing to me how he basically had everybody dead to rights, and everybody knew exactly what had happened. And like most politicians, especially the SEC, they looked everywhere else to blame everything else and avoid exactly what he had already figured out. He runs a company called Nanex, not to be confused with Nadex, that has every tick, every order put in. He doesn't throw away any data, and he has all the intraday data, I think starting back to 2009 or 2008. So literally, when you talk about big data, Nanex is it. It has every canceled order. What he had figured out was that the New York Stock Exchange, in its infinite wisdom, decided to tube a lot of folks, and that was by delaying all the data going outside of the NYSE 200 milliseconds. And of course, in a little different time in 2010, the back room used to be filled totally with computers. In fact, that was the highest square foot rent that you could find in the world, actually 4 times higher than the next lowest rent per square foot in Japan at the time. The reason why, it was close to the trading floor. Of course, now they've moved all of that out into New Jersey, and it doesn't matter anymore. The New York Stock Exchange, when you see people literally sitting in front of it on CNBC, is nothing more than a prop for most things. There's a few reasons to have actual market makers on the floor, and that is normally for IPOs. And when stocks get halted during the day, they can put a book back together and get the stock trading again. Sometimes it's nice to have a human involved, but for the most part, that's not it. Anyway, what he found out was that basically the New York Stock Exchange at will could delay the incoming feed and outgoing feeds outside all the computers in the back room by 200 nanoseconds. That's a fifth of a second. And by doing that, they could route around everybody. Well, what they didn't think about at the time was how easy it would be for people on the outside just to keep putting in sell orders and drive the market down. A big cause of the flash crash in 2010. But he proved that they had the ability to turn it on and off at will. At least part of the fine for the New York Stock Exchange that was announced yesterday night and this morning was that they will pay $5 million for that, which seems to me like, as one great movie said, handing speeding tickets out at the Indianapolis 500. Just rather ludicrous in the scheme and scale of what the New York Stock Exchange did for so long, which was steal money right out in front in public. As most people say, was it Godfather said, you can steal more with a briefcase than you can with a gun. And certainly they did. He's going to get $750,000 for coming forth with this information. The only thing I wish is that they would also probably give about $1 million to anybody that traded stocks during that time. And we could get those big giant foam bats that people are supposed to beat each other with during, what do they call it, therapy. You get your wife and your husband, they beat each other with the big foam sticks or giant Q-tips or whatever to get the anger out. And we could all beat Mary Jo White, who avoided for almost 4 years the truth that was right in front of her face. I guess to me that is the most interesting part of this is how tough. In fact, we had a couple of the SEC people on my show early on until I got up and got to the level of knowing that these guys were just phony weasels. We had the guy on that looked just like one of the terrorists in Die Hard. Remember the blonde-haired guy that was, I think he was a dancer in the ballet, Bolshoi ballet, the Russian one. Anyway, he was the terrorist in it, the blonde guy. And maybe someone knows his name. But it is kind of interesting. But anyway, thanks to Eric, we now know the truth. There was a $5 million fine, which seems like absolute peanuts. And in almost the highest comedy known to man, CNBC had to do and cover this while they were sitting on the floor of the NYSE, and nobody from the NYSE would come and comment on it and say, yes, we did bad. We're not going to do it anymore. They just said no comment. And CNBC slavishly left it at that. I think I would, if you're on the floor, you'd have to come up there and say, okay, we're going to have a pound of flesh from you thieves. But not anything like that. Probably the most interesting thing to me about the whole deal was how they actually did the 200 nanosecond delay, not a nanosecond, millisecond delay. They had a big 300-foot cable and a 1-foot cable. And they would plug these 300-foot cables in to a variety of routers to actually cause the delay. And they would instruct people to go back in there and plug in these big long cords, which is kind of, now everything's done digitally. And maybe they figured out how to do it otherwise digitally. But in 2010, on that flash crash day, they started the market to move. They pulled out the short cables, put in the long cables, and slowed the market down outside of the trading floor, which was a big no-no because, of course, Dodd-Frank specifically said that that was something that someone should be thrown in jail for. No one went to jail. They paid only $1 million fine, but that's it. Anyway, we kind of went on long with history in this. We'll get to charts as soon as we get back from the break, but I think that's about it for news. Apple's product event now is going to be the week of the 21st, so probably figure it's going to be the 22nd. I saw it bounce up to $100 today. Everything is sunshine and rainbows and unicorns, and rainbows coming out of the rear end of the unicorn today on a big, big rally day. 1969, the same year that Mickey Mantle retires, is the same price of the S&P cash. 3.12 billion shares. We'll be back and go through the movers and shakers today in the market.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. I'm typing, though. And, go on. see what we got else. I don't know. Just some people keep typing. 1971 on the S&P cash, 3.15 billion shares. We're going to go through the movers out here today as quickly as we can. Encore Pharmaceuticals off 8%. And not kind of this sector seems to be probably the weakest today, down on volume, going against its February 24th low just a few days ago that had 1.5 million shares, 2.5 million shares. So we're still seeing some weakness. 5202 takes you back to April 30th of 2015, and you've got a nice little gap up. That's probably where support is going to be. That actually was around 51 bucks. So some of these are actually going to come back into this level fairly quickly. And I don't know what else you could say about biotech and pharma in general. American public education, of course, for public education has been dubious at best. And these are some of the stocks that you can find where earnings are not quite as horrible as everybody else. Almost all these other companies have gone out of business already, as Tom is apt to say. These things were all giant frauds. I'm not exactly sure about this particular one. I think all the rest of them, like Coco, aren't they all gone, out of business, bankrupt? Up on heavy volume today, it's pretty much back to its 50% retracement, and up a whopping 21% as we speak. I don't know if there's a whole lot you can make out of this one, other than that light volume caught a lot of people sleeping, which is kind of the job for a lot of these stocks. Apogee Corporation, this popped up fairly nice, about 20%. I'm not exactly sure why it did. See if I can see out here. Earnings call, okay. Beat by 10 cents, beat on revenues, guides EPS above consensus, which I think that will do it. So you got a nice little pop out of this one today. But again, can you really make, I mean, a low volume stock had 220,000 shares on August 24th. It did not break that. So it never got through that low. So I couldn't have bought it. But it got close on about half the volume. And you get your pop out of it. But I don't know if you're going to get anything more from that than a lot of consolidation for a while. Axogen is down 6% today. Let's see if we've got anything in this. Volume's a little bit better. Nice engulfing out here. Don't know if you can make a lot out of that. AutoZone, much more interesting. 2% for it. But this thing's been kind of bouncing around its previous highs. Looks like it wants to go to $800 or $803. That's the December 9th and the November 6th high of last year. Looks like it's creeping up there. Energy is not as good as you would like. It had a lot of big bounce on the 16th of February. That it did have some decent volume, 600,000 shares. But it looks like it just wants to go up there and kiss its buddies up there November 6th and December 9th. But it looks like it's just going to be a peck on the cheek unless a volume comes up. Barclays down pretty much close to its February 11th low, $8.52. Not bad. Doesn't seem like everybody's that all up and concerned about it, but it certainly got volume, 6.8, almost 6.9 million shares already. So it's already into that candle of February 11th with more volume. So we want to keep an eye on those European banks still. The Bank of Nova Scotia is another one, except it's on the upside out here. BNS up 7% on the day. I guess maybe it's far enough away from Europe. Anyway, nice bounce out and through the previous high of February 4th. On volume today, 1.6 million shares. Bank of Nova Scotia. Seco, career education, another one, up 25%, as we said. Some of these companies still in business. but gave a great deal of that back. Got to $3.68 as the high today, and gave about a ton of that back. Still holding on a nice little gap. Volume is to the upside, but like I said, just any kind of news on these stocks where people have been perpetually waiting for these things to go out of business can get a big move. CODI, which is Compass Diversified Holdings. And I found out about this company. This company's actually flat on the day, but had earnings. We talked about safes and safes in Japan last week. I've been kind of watching this one. They own a couple of safe companies. They own a bunch of other stuff too, though, so it's hard to see a straight play on it. But this Compass company is, I think, Liberty Safes and some other ones that we talked about last week. CRC, which is California Resources Corporation, up 60. Is that right? 60%? That's what it says. Oh, it's up 60% because that's a penny stock. Wow. Yeah, I guess it is. California Resources up 60%. Crocs, which is a croc, spiked to its previous low on volume. It's not quite as bad off as it was earlier in the day, but off almost 6%. We have Diplomat Pharmacy. As I said, this seems to be the weak of the day. The pharmacies or biopharmaceuticals. A great deal of them are on the list of the big movers. This one's back down, headed back down to its October 22nd low. That had 1.8 million shares. Already have 6.7 million shares, so that probably tells you everything you need to know. Excellus up 5%. And we'll take a quick look here. Well, man, it's given almost all of it back. He had a nice test of the previous low, minus 2 cents from the January 20th low, 7.7 million shares. You had it tested with 4.4 million shares. Got a little news out on it today. It really had the squeeze going early in the day, up to $4.30. But you've given almost all of that back. Yeah, for the most part. We'll see what it does in the rest of the day, but decent volume. FCAU, which is Fiat Chrysler. I got to sneeze. And I'm back from sneezing. Hope everybody didn't get any on them. Fiat Chrysler up 7%. Everybody saw this pop a little bit more than anybody would think. Not the volume really not coming back in that big. Let's zoom in here a little bit closer. But you can back up into this gap, which is 760. But this may be the last hurrah for the car manufacturers. A lot of cash out there on car loans these days. I don't think it's going to get any bigger. When we come back, we'll look at FS Investments and GSSL. What's that?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And back. We're going to look at a lot of global ship leasing, taking it rather bad today, blowing out the lows. And you got to think that if you're, with the Baltic Dry Index down at lows, probably not a good time to be in the ship leasing company and hoping that you get your cash back. But certainly everything that you would like for a blowout of a bottom out here. You've got volume, you've got price movement, and a big candle. Halo. Alzheimer's Therapeutics up 7% today. Again, has given a great deal of the spike back. It got to $9.64. Some decent volume up here. You kind of basically started seeing people that were in this thing back on, what is that, the 18th. As soon as it got higher than that, it looked like a lot of them were more than willing to sell out on this one. But you might have the at least basis of some consolidation here that could be bought later on. We'll have to take a look at that. You can call me at 877-927-6648. Email me at path@tfnn.com and post a message in the den. Hertz, nice pop in this one. And that is kind of an interesting day. Not a lot of volume on this, probably after Avis's disaster. Maybe this thing was just down a little farther than maybe it should have been. Decent news gap up, but not enough of volume, probably. You've got this high volume day with 7.4 million shares that it has to get through on January 27th, and that's probably the range-bound part. So maybe 50 cents higher out here in its trading range. JD.com, which is the Chinese company, up 3%. This looks to me like it's going to try to get back up to this gap down that it had on fairly decent volume back on the 7th of January. You need 18.2 million to get through that. You got about 13 million shares today. So that would suggest that maybe this could get into that $29 level for JD.com. JKS Solar, another one of these coming up to some of its gaps. This one literally could be a short any time now. Maybe was today. going into this gap down with a monster volume as this thing blew apart on the 7th of it. January down with 3.3 million shares. You're back into that with 700,000 shares today. If this thing was above 30 bucks, I probably would have bitten on it this morning. I just don't like shorting stocks under 30 bucks. Just one of my rules. It would have to be an extraordinary reason to go after it. Juno Lighting up almost no volume out here today, but it was one on the list up 10%. So, or no, that's Juno Lighting or Juno Therapeutics. I don't know why that one's wrong. I think it's Juno Therapeutics, not Juno Lighting. Up 10%. Kite Pharma, one of the ones up and bucking the trend on a lot of these downtrends on pharma and biotech. Up, got some decent volume. Kind of just off the lows, though. So doesn't say that this thing's really done consolidating in a lower move. You know, it was November 19th. This thing was 90 bucks. So down to 38.41. You got to look at this thing as having a lot of overhead resistance, but bucking a little bit of it today. 2 million shares so far. Lin Energy off 2.5%. This thing actually starting to look fairly interesting down here. If you like penny stocks, I like the sideways action, and not much happening out here. Maybe it was moving earlier in the day or something. Another stock on the upside for pharma is LXRX, Lexion Pharmaceuticals. A nice bounce out of this one. When we look at the volume, though, a million shares doesn't do it for me. You've got a gap that goes back on the 7th of January, too. That would take you to just a little over 12 bucks, and that may be it. And again, these kind of operations, or a lot of these stocks, have kind of the smell of short covering today. The question is whether or not you have any follow through in the next 2 days. MBIA, the banking giant, up 5% today. A lot of these financials were strong earlier in the day. I haven't looked at them lately. MBIA up 5%. That gets it into the December 24th high of $7.05. That day had 3.6 million shares. We've got 2.1 million shares. It did pierce it. It is not holding a lot of that so far, so you might want to keep an eye on MBIA if you're playing with the financial stocks out there. What else do we have? Dip down on Medtronic. Of course, they make pacemakers and other things that people insert into your body. 4.5% down today. This thing had been kind of beating against this high 78s, low 79, mid 79 level for some time. So it's been up here. Actually tested it with a little lighter volume yesterday. Made a pretty nasty looking little doji up here, and gave it up today on news. 11 million shares on December 17th. Got into that candle yesterday with 8.6 million shares. I wouldn't have bet on it, but certainly not one of the best looking stocks out here. NEO. Boy, were we going through a lot of stocks today. Neogenomics up 8%. Nice little pop. This doing a little taste of volume today. Just wetting my beak, as you can say. Did it, but for the most part, it looks to me like a retrace. Where would you have to get to this thing? Yeah, it just got to 50% retrace today, so not telling you a great deal. Volume picked up a little bit, but I'm not going to say the volume is a big deal on this. Price-wise, what do we got? Yeah. Just back up to the consolidation level that goes and starts on the 8th of January, where it went sideways pretty much until the 26th, where it rolled over and died on February 12th to make a low at $5.49. Just a 50% bounce off of that low so far today. What else do we have going on here? OP Power, NSLT, OPK. OPK was Akko Health. Don't see a lot in that one. Terraform Power, TERP off 2%. And just a lot of these stocks kind of just flailing around at the lows. Terraform Power. Trying to do a consolidation. You need to look at this sub $8 again into this gap that's been acting as support. What else do we have? TrueCar. Do we have that in there? I don't have it in my list. TREU. Of course, this one blew apart on earnings not that long ago and has been in this lower consolidation range. TrueCar blew apart literally in half on, July 24th of 2015. Got back up, filled the gap. And just kind of beating around these lows. We'll take a look at this when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at TrueCar. Of course, this thing bounced, and like a lot of these fairly weak stocks, this thing's just filling its gap and then giving most of it back here today. Trying to get through the 1.8 million share day that February 18th had on 1.2 million shares so far. Not enough juice. It's got a high volume low that kind of was tested, but I don't like them being tested just a couple of days later. I would have liked to see the thing tested more. Still looks incredibly weak today. We have a emailer who says, can you review equity workday on your show? It looks like shorts are covering positions after earnings yesterday. Can you advise an entry point for a long position? And I would think that you would may be able to get this thing back on a 50% retrace. I don't know if today is the high. You've got to look at it. But right now, probably the best place to get involved on this would be $57.80. That's 3 days of consolidation on that gap. That gap did come up on 3.5 million shares. So if this thing could get back down to that level, lighter volume than 3.5 million shares, you got to think that maybe you have a shot on it. I like the company. I continue to want to buy it. I just haven't found a very sweet spot where this thing is given a good signal that says buy it yet. I would like probably a little bit more of a retrace than that. But I love the people behind it. Most of the time, I don't spend a lot of time saying, hey, there's a great CEO. He knows what he's doing, a great CFO. They know what they're doing. But these guys are some of the best guys. And I think a little bit of their huge stock price appreciation today is that they said that they're going after Oracle and are going to buy Oracle. I don't think that there's any chance in Hades that they do that. But of course, both of these guys were the heads at PeopleSoft in the 2000s, and they ran an excellent company. And of course, Oracle ended up green mailing them out of their own company. They didn't like it. They've now set up Workday. And I guess the way they've set it up, you're probably not going to get a buyout of it. So you've got to hope that they do the right thing. I just love the business behind it. It's kind of like Paychex. But all they do is supply all the software for you. You have somebody inside your office typing in all the data. They just have one central repository software that knows your location, and when the laws change, they update it for you. And you just type in and get one of the gals or guys in the office to type in the information. The paychecks come. The human resources stuff is done to pay your health care. Basically, if you want cloud services like Paychex, Workday is your company. I think it's going to do very well. Got about a minute and a half. I've got a few emails here. I'm going to see what I can get to. Everybody was kind of late getting their stuff out here. What else is going on out here? That's it. Let's go back and look in the last minute what we have for the indexes. Well, we continued up 42. We'll call it 43 points on the S&P cash, 3.4 billion shares. I think we're probably looking at an exhaustion day. Doesn't mean we won't go higher eventually, but I suspect that what we have today is a lot of exhaustion for those late to the party shorts that are now getting squeezed out of the market. I'll know a little bit more tonight. You've got fun buying. I would think that you probably have a good shot in the next couple of days of seeing a little bit of a pullback to 1935 on light volume. That would say that 1935 is a floor in the market, and you probably would think that maybe you could buy the market for a little while. If we come back on heavy volume, Katie bar the door, but I think we're going to have some good signals in the market here shortly. Hang on for the one and only Tom O'Brien the next 2 hours, and then my friend Andy Heck, my brother from another mother. Sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.